Peter Eliades with you again. This is Stock Market Cycles Update from Monday, May 18. We will begin now, as we will from now on, to remind you all that what we consider to be our fabulous price projection software is now available to you in the marketplace. In fact, with this special offer from TradeStation, the only price you'll end up paying is for the software. The TradeStation platform, my understanding is free. Much of the data is free. The commissions are free for equities and relatively small for futures. So anyway, there'll be a link beneath the video today that you can click on to get more information from TradeStation about it. But the application is available for $49 a month, but there is a 14-day free trial. Take a look at it for a couple of weeks. I think you'll fall in love with it, but that's up to you. Okay, let's go over a few of the things we went over for the weekend, a couple of these charts. This is interesting. Now, a huge rally today and a very good breadth in the rally. There were 2,650 stocks up and only 327 down, so it was a huge rally. That's 8 or 9 to 1 in terms of a ratio of up stocks to down stocks. This is the S&P cash, and we showed you this somewhat unusual parallel channel we constructed using these lows and parallel to the Christmas of 18 bottom. But you'll notice that it's found resistance up here for the past couple of weeks, the past month, we should say. And today, up inside from the bottom of the channel, it did that back about 3 or 4 weeks ago too. So can't get excited by that one-day break above. But that is a positive move in terms of what we might see here. As you know, we have significantly higher projections, and 1 or 2 has been added to that today, which we'll show you. Anyway, this is the S&P chart. Let's take a look at the Dow one. Here's the Dow chart using the February of 2016 low through the December of 2018 low. And as you can see, we distinctly broke below that in the February-March decline. And I'll bring it in a little closer so you can see it in a little more detail. This is what happened. We've rallied back up to it, virtually exactly back up to it on April 29th, pull back again, and now look where we are today. So is this going to be challenged again? The projections suggest it will not only be challenged, but overcome. 200-day moving average is way up here. So the picture's getting interesting for a lot of these indexes and averages. So that's the Dow. What we're going to show you now is the AD line. Here's the daily AD line of the New York Stock Exchange. Now, this one is not doing very well. So in a way, if you want to be bearish, this is pretty good, because if indexes do go to or challenge the old all-time highs registered in February, it's a pretty good bet that the AD line is not going to confirm. Remember, there were very, very slight non-confirmations of the AD line up in the February highs, but not the type we generally see at very important market tops. If we were to go to new highs now, I have a suspicion that we would have significant divergence in terms of the AD line. But also look at the AD line. This has been resistance for it after breaking below this line, very similar to the one we put on the S&P, using this trend line and paralleling it to December of 18 low. So we broke it easily, rallied back up towards it, rallied right up to it, pulled back again. And now, in not as big a move that we saw on the Dow or the S&P, the daily advanced decline line nonetheless did have a good day today, but still a long way to go to get up there. Okay, the only other thing we're going to show you is projection charts. Let's take a look at those. Okay, here's one of the projections on the S&P cash index. Remember, this was given way back in, April 20th or so. So we're well over a month beyond that. And it's been interesting since then. And I'll remind you once again, we theorized that when we got up here, that we would do a sideways to down into the middle of May. That's almost exactly what happened. And now we are rallying up, and when you see the next chart, you'll see that we're getting projections that are somewhat similar to these. So write these down. You probably have them already. 3372 rounded off and 3465 rounded off in the S&P cash. What makes those interesting is, and we're not going to save any time now. We're going to show you how easy it is, the way Stefan has upgraded this software, to go from this offset to the next longer offset. You simply, look, wow. Fabulous, isn't it? Okay, so now this is where the bar is today. And so we have a preliminary projection up to 3503. That's right back to where the 5-week offset and the nominal 10-week projections were. Now, we still have this blue line to overcome, and look how it right from this point is a pretty good rally over the next, let's say week or so. Maybe even a couple of weeks coming up into here. So in order to confirm this upside projection, which right now is preliminary up to around 3503, you need to get above this second offset line, which is the 20-week. These two lines are the combination of the 10-week offsets, which would give nominal 20-week projections. So, but here's the surprise today. We showed this to you a couple of weeks ago. Let's very quickly just snap right here and go to this offset, 189 to 194. This is nominal 78 to 80-week projections. Now remember, we showed this to you about a week ago and said, whoop, look at that. We got a little crossing above here. Then we got not quite below both lines. And now today, we're definitely above both lines. So this projection is confirmed. 3490 to 3656. So now we're going to have 3 projections to about the same area. Nominal 10-week projection, nominal 20-week projection, and nominal 78 to 80-week projection, all to around the same area, back near the all-time highs. Does that mean it's a guarantee we're going to get there? No, I'm sorry, folks. It doesn't work that way. We still have no written guarantees in the stock market. But this is something pretty exciting to watch. And the fact that the nominal 78 to 80 week now has given this upside projection. And look what a perfect projection it gave to the downside. This is on the S&P cash. It called for 2157 to 2319. And the low on March 23rd was 2192. So this was a virtually perfect projection right here, and it wasn't one of those huge projection boxes. It narrowed it down pretty well. So that's where we stand. Today was a big day. It leads us to think that the market is going to attempt a move to the old highs. I'm as much in disbelief as most of the rest of you are too, because we're aware of the underlying economic fundamentals. And we were so overvalued here when everything looked pretty good economically, not only pretty good, but as good as it's looked in decades. And now, when things look as bad as they've looked in decades since the Great Depression, the market's saying, no, we're going back to those old highs again. We'll see. Thanks for watching. Remember, the software is available. We will have a link down below for you to communicate with TradeStation. And those of you that have the software, and there are quite a few of you now, please comment. Let people know that you're working with it and whether you like it or not. And also let us know how you like these updates that we're doing. Bottom right, if you haven't subscribed yet, do so. Click on the banner, click on the bell. It'll notify you whenever a projection goes on. Thanks a lot for watching.